put up the old heat map.
Welcome to both of you. And Mark, I'll just start with you. I mean, it almost seems as markets are rallying.
In 2013 closely resembled COVID-19. Now that's according to a report that's in the Sunday Times. Now they say that they found these samples in a bat-infested former copper mine in southwest China. And this was after 6 men working there contracted a severe pneumonia. And the Wuhan Institute of Virology, they describe this virus as a SARS-like coronavirus of bat origins, and they say it's 96.2% similar to the coronavirus that we have right now, COVID-19.
Wow, so it's been maybe.
It evolved. That's
Yeah.
it exactly. I know you studied that in university, but
Yeah.
saying that over these 7 years or longer, that it could have definitely
Yeah.
evolved into something very similar.
Yeah, that's interesting. Speaking of China, let's look overseas for what's going on. Chinese markets, we'll take a look at both the EEM and the FXI here in a second, but up almost 6% as the Chinese government signaled it's a good time, everybody, to buy stocks over there. They have a state-run newspaper, and they had a front-page editorial that said the pandemic is fostering a healthy bull market, and that is more important to the Chinese economy than ever. So they encourage their citizens to go out and buy stocks. In other Asian markets, Japan was also up 1.8%, Hong Kong was up 3.8%, and India was up 1%. Turning our attention to Europe, we had some mixed data. Eurozone's May retail sales did jump 17.8%, and that was better than expected. They were looking for a 15% jump. But they're still down 5.1% year over year. But again, that's better than the expectations. So this was a positive report. What was a little negative, though, was Germany's May factory orders. They jumped 10.4%, but they were looking for a jump of 15%. Domestically, we had the ISM non-manufacturing index for June increased to 57.1. So remember, on that series, anything over 50 is expansion. So this is the first month of expansion since March. So that was a little bit positive. So it was the largest month-over-month improvement in this index since it was started to be tracked in 1997. Now, Goldman Sachs, I know you have some information from Goldman too, that they said this weekend that they expect a weaker rebound in the third quarter as local leaders, many of them at least, are going to put on fresh restrictions about the virus. And they said the U.S. economy will grow at an annualized rate of 25% as opposed to their previous reading of 33%. But you had some information on Goldman too.
Right. So at Goldman Sachs, masks are now a part of their investing matrix. So they've done some research and they point to data that shows a high correlation in Europe and Asia of widespread mask usage to fewer COVID-19 cases, fewer hospitalizations, and fewer fatalities. And Goldman Sachs, they do estimate that if the United States really did have some type of comprehensive, national face covering policy, that it could prevent a 5% hit to national GDP. So that was quite interesting.
Yeah, amazing. Speaking of blue chip investment banks, JP Morgan came out and had some interesting comments. They said that the amount of money created so far in total is about what we saw during the financial crisis, but this has obviously happened much more quickly over months as opposed to almost a year before. So they also think QE will continue to be stronger than normal, uh, at least through the end of this year into the beginning of 2021. And they feel that the total money or liquidity creation could exceed 15 trillion, that's with a T, or more globally by the middle of 2021. So then they went on to say, so given where bond yields are, they feel that most of this excess liquidity will eventually be deployed into equities. So that was kind of interesting. It's a lot of
Hmm.
positive commentary there. All right, let's do our commodities review. Start with, we're going to talk about this one later. Let's take a look at gold. So we had the breakout, and then give it all back. So I've got the 10-day moving average there. That's what I'm watching to hopefully play this breakout. So what are you going to say? This is at least on the GLD, it is a little bit more bullish.
And that, and it's interesting because, that when you look at the regular gold, I should say the gold future, that $1,800 level that we saw last week, what was it, on Tuesday? We haven't
Yeah.
seen that level since 2011.
Yeah. So let us see if more people probably trading the GLD than the future. Let's get a measured
Right.
move there for you. Um, Again, remember these measured moves that we talk about, they're just based on uh, chartists looking at charts. No guarantees, rough rules of thumb, so take them with a grain of salt. Um, so what do you have here? With 157 to 165, like 8.5 points. Let's say 9 points just to make the math easy. That puts you up at 174. So let's draw that in there. That would be a potential first place to take a little profit, perhaps. They're at 174, right in there. Or a close under the 10-day moving average would cause you to, at this stage, would you get out of it if it broke the 10-day? I probably wouldn't. I would wait till we actually went back down into the range. So use that as your stop. All right, speaking of metals, let's look at the doctor. Front month is September on that one now. Getting a boost from that comment from the editorial in China for sure. Looks like we're making another high. As you know, we've been saying that this is definitely confirming the move in the equity market. If you're trading it, the 10-day moving average looks very appealing as a place to manage your risk. Notice a nice time correction that took you right to the 10-day, and now we bounced off a bit. If you're not trading the future, you can trade the ETF. And if you want to trade the miners, it would be COPX. It actually broke out on Friday, and we pointed that out. Or was it Thursday? Thursday, and end of last week. So little measured move here. You've got a nicely ascending triangle. Let's figure that one out. These are not advice or recommendations, simply observations. So we'll take a look at our segment line here. All right, so 15 and a half to 17 and a half, basically $2 puts you up to 1970. There is your move. There's your mover. There's probably going to be a little bit of a pause right where we had the high today.
Some resistance up there.
Yeah, a little resistance, but if we can break through there, that suggests a quick move up to that 1970 area. All right, let's take a look at oil, and Nina's going to give us some statistics on summer driving and a few other things here on Google searches. Very interesting stuff. First, let's just put up the chart of crude oil.
I mean, it's this time of year where everybody's thinking about, traveling, maybe spending some money and being a tourist around the country. But this year, it looks like, 2020 is going to be a bit different. AAA is forecasting that U.S. summer travel will fall by nearly 15% compared to last year. The thing is, the past 4 years, travel has been increasing. So from July through September, travel has been increasing at an annual rate of more than 3%. And they're also, according to the Data Trek, they analyze just a lot of stats out there. One of them is Google search results, and they say that there is elevated interest in RVs and boats. People do want to get out and drive, and sounds like not stay in hotels. And they're not Googling airlines. They're not Googling travel websites like Expedia. And they're also finding out that cell phone location data shows that foot traffic to businesses leveled out at the end of June. So there was a pickup earlier on, and it's flattening out. But keep in mind, if people are traveling and they're going out, they're staying in hotels, if they're eating in restaurants, well, that's a big part of the U.S. workforce. So 11% of Americans are employed in the leisure and hospitality industry. Well, that was before, I should say, that was before coronavirus hit. So we'll see what, the final numbers are later this year.
Yeah, if you are interested also in oil, I would draw your attention to, there's an article in the Wall Street Journal today on oil. And it's pointing out that we have had with the problems in the oil patch, we have had a decline in U.S. production. Remember, because of kind of the shale problem, we were at 13 million barrels a day prior to all of this, and then now we're down to 10.5 million barrels a day as far as daily production.
And there's been some news too. You just mentioned, problems in the shale patch. Well,
Yeah.
Chesapeake Energy, they filed for bankruptcy. Now, it's been long a rumor that they could, file for bankruptcy soon, but they were one of the original shale pioneers. But as it turns out, they just got into heavy duty debt. They bought up a lot of land, and they went into heavy duty debt, and that all these long-term contracts with different pipeline companies turned into just a lot of liabilities, almost a $1 billion. And so they declared bankruptcy. But there was a deal too. Warren Buffett just made his first major deal with they bought the natural gas and storage assets of Dominion Energy
Yeah, we talked about that one
on Trader Talk.
Yeah, yeah. I would also point out that if we can get the economy moving a little bit better, there's a chance that this could start moving, because if you look at the wells, there's only 185 wells out there. And that is if looking at the Baker Hughes report from last week, that is the lowest level of wells in the United States for the last 10 years, which is pretty interesting. And also, they're shutting down wells. Continental Resources shut them down, and the drop in wells over the last couple months is the biggest on record, going back to 1983. So kind of interesting if demand does pick up, that there's maybe the price of oil would go up a little faster, given that the supply, as far as at least wells that are working, is a little bit light. So keep your eye on that. But from a charting perspective, uh, it depends on how you draw this, but certainly key level to watch on the upside. Pretty good resistance at 42.29, but oil's been holding in there. It's been correcting more by going sideways than pulling back. So that is a stronger type of consolidation after the big run up from the bottom in May, when we were negative, obviously. All right. Now let's turn our attention. We had that big move in China, so let's take a look at some of the Chinese markets. First, emerging markets in general. China's about 40% of the EEM here. Nice move higher.
And last week, China was up 3.7%. So last week was good.
Yeah, we can try to get a measured move on this one. So let's take off everything and just draw it in there. So you'd have to say that is the formation, an ascending triangle, 37 to 41-ish, say 4 points, 45-ish, which is very interesting in that that's right up there at the previous high there. So seems to me, there you go, as a target. To manage your risk, usually on these big breakouts, you monitor the 10-day moving average. So, okay, let us look at the FXI itself. So the EEM's up 3.76%. There you go. This is the Chinese market. What are you going to say, right? So there's the potential place that you've been lucky enough to be in this, that you might want to lighten up just a little bit, is up there at about 46. All right, let us move on to the S&P 500. Let's go to a year chart here. Yeah, so we talked about this on Trader Talk. We also have our own triangle breakout. Although first, so we had 29.50 to 32.50 basically, 100 points from, we're talking about 3,200-ish. So right in here, I think the key level to watch is the previous high we made there, which I have there at 32.57. So that would be a trading target on here. Let's take a look at the SPY, because you can't trade the SPY.
I was out for part of the week, so I was just looking at how different sectors did. Now, the overall S&P 500 last week, it was up 4%, but the sectors that outperformed others, um, let's see, if you just look at the sectors, the materials seem to outperform the others, which I thought was pretty interesting. Then it was healthcare, and the worst performing sector last week, they were the financials.
Yeah, we'll take a look at all those charts in a sec. So that, next place on the SPY would be that 323 area. Let's take a look at the NASDAQ itself. We'll take a look at the Qs. Well, there you go. I mean, new high. Measured move. Let's again, if you consider this as a triangle, let's take everything off and draw it in there.
Now, Lee, Kevin in
Yeah.
Florida has a question. Why is the top of the gap considered resistance?
So let's say let's say if you're looking at this one here, why would it be resistance? Because there were people that bought it, let's say right here, right? And then it dropped. And now if it gets up there, they have break-evenitis.
Hmm.
Oh, it dropped, it went down really fast, but now it's about back to where I bought it before that big. I just want to get out of this trade.
Right.
That's
Let
why.
me just get back to square one and then I'll
That's
be
right.
over with it. Mhm.
So that is the reason, psychologically, anyway. All right. Let me redraw that a little bit. All right, 9,200, 10,200. That's 1,000 points. Would be 11,000. All right, there's your trading target on that. Now you can't trade the NASDAQ composite, but you can trade the 1Q, which is the NASDAQ composite ETF. So you could do the same thing on this if you wanted to, which is different though than the NASDAQ 100, which are the traditional Qs. Again, you can see I have to draw it in here because this is what I'm watching. So 230, 18 points, 270. That'd be a potential trading target on the on the Qs. All right, what has been lagging still is the small caps. I got the key level in there. We tested it again today and failed. We tested it on Thursday and failed.
And keep in mind we are going to go into earnings season. It kicks off again next week,
Yeah,
and
it'll be very
you know,
interesting.
so and expectations are not that great. Um, there's still analysts are forecasting earnings for this this past quarter to have dropped by 43.1% year over year. So, but once again, it depends on the sector and the individual company too, but it could be pretty bad as expected.
Right. Now, the talking about earnings, what I've been hearing from the different trading desks is we're still clinging to 2021 earnings of 160. So we'll have to listen to guidance and see if
Hmm.
that'll be possible or not. But that's what the market's trading on right now, which gives the forward PE at about 19. All right, let's take a look at sector action. There's a lot of cool things happening today in sector and industry action. So some interesting breakouts. So let's take a look at industries. That Chinese data is making this one fly. We told you about this one. This is shipping rates. We mentioned the breakout, tested the breakout level, and has taken off again. So this is based on the Baltic Dry Index.
Hmm.
When this is really moving. Let's go back just to, yeah. So it seems like you really don't have any resistance on this until about 12 bucks. That's kind of interesting, huh? Just see if what's the volume doing today? Yeah, nice. That is confirming that breakout. So we had mentioned that one before. Again, not recommendations, just observations.
Yeah, that's a
Yeah. So we were talking about
15%. That's huge.
yeah, and then what we can see here also is you were pointing out the materials. You can see what's going on. It's lithium, rare earths, right? So let's take a look at lithium. That is a heck of a breakout. look at it on a longer term chart, right?
Hmm.
So play here is a stop underneath the breakout level. It's shot up quite a bit. What do? My view is also you buy a little bit, even if it's extended, but you save some of your powder, keep it dry in case you pull back to a reasonable support and hold, and you can add more. But you never know on these things. That's why you buy a little. You've seen stocks up 12, 13, 14 days in a row. So, you know. All right, we got a question from Jared in Hawaii. Thank you for joining us from way out there. How can you tell the difference between a breakout and a fake out? So what is it that confirms the breakout? Generally speaking, on a break higher, you would like to see volume greater than the average volume. That can help confirm. On a breakdown, you really don't need that. Stocks can fall under their own weight. So if you are trying to evaluate, Jared, a breakout intraday, so you put up the volume bars, you can see right now it's higher, but that's a little bit misleading to a certain extent because volume during the day, as we say, is not linear. It's more U-shaped. You get a lot of volume in the beginning, dries up in the middle of the day, and then you get typically volume picking up in the last 2 hours to 1.5 hours. So what you need to do to validate this intraday is the volume higher right now at 10:30 Pacific than it is on other days at 10:30 Pacific? And the way you do that, Jared, is you use our average volume over time study. So I have mine set for the last 3 weeks. So right now we are up 123% on today's volume at 10:30. Then over the last 3 weeks. So that is confirming. Hopefully that answers the question there. Why isn't it Dominion Energy doing better? Well, I don't know if they were, this is the one that uh, Warren.
You know what? Berkshire
Warren,
Hathaway was up. Berkshire
yeah,
Hathaway was actually up. Sometimes it's, the opposite.
yeah. So I don't know. Maybe that was. I don't know the ins and out of this company. I just know that the news is that maybe people thought they sold it a little cheaply. 10 billion. The reason I think they're down is that they're only getting $3 billion out of it because Berkshire is taking on 5.7 billion worth of debt, and also to think about it, they owe 2 billion in taxes too. So
So maybe
uh,
it's worse with all this news coming out. Maybe people didn't know exactly the extent of
right,
how, you
that's what
know,
I'm thinking.
how Dominion was.
Right now, they said they are gonna, but they still gonna net 3 billion, and they said they're gonna use it for buybacks. But the market is saying, well, we didn't maybe think that you had that much debt or you were that
Hmm.
behind on taxes or something. I don't know, but
Hmm.
certainly a negative breakdown.
Yeah, usually it is the opposite where the acquiring company uh, is, is down. But today it was up like 4% or something.
Yeah,
Berkshire.
yeah. Let's take a look at lithium. We took a look at. We can look at just rare earths in general, which is more than lithium. This is all on the China news, I think. So really moving. Let's take a look at the mining stocks in general. So this is the mining stocks in the S&P 500 is the XME, not moving quite as much, right? But you can set your risk on this pretty easily. You can see where the support is, 2033. We saw that GLD is still holding its breakout. Let's take a look at the miners. Let's take a look at the larger gold miners. They still a little convincing here. They've got to break out of their old high, but watch to see if they do, then they might be able to move. Let's take a look at the junior gold miners, GDXJ. looking a little bit better. They are threatening now to break out. They're a little bit closer to the breakout level than the big ones.
And Lee, you were talking about, there's been some good news out of China and also how China is supporting their stock markets as well. But I read an article in the Wall Street Journal that China is unlikely to meet its purchase targets for U.S. energy after
Right.
the U.S.-China deal. And so far, they've only purchased about $2 billion of the energy that they of the 25 billion that they promised this year. And then they've only purchased about 39% of the agricultural products that they promised. I
Right.
wonder if they'll start kicking that in gear as the
Y-
year wears on.
Yeah, I think so. I think, obviously the reason was the
Mhm,
coronavirus thing.
mhm,
They didn't need all that stuff when everything was
mhm,
shut down, but as they're
mhm,
roaring back, to your point, hopefully they
mhm.
will. Um, all right, let us take a look at another one that's really moving, I want to point out. Solar energy.
I haven't looked at this one.
Yeah.
I like the ticker TAN. Nice.
Yeah. Yeah. And again, there's a pretty good article in the Wall Street Journal going over why uh, solar might be good. They actually had a quote, which is kind of interesting. They had a quote from Thomas Edison way back when in a correspondence with Henry Ford
Mm.
back in the early 1900s, where Thomas Edison said, "For my bet, it's solar power." And that was 100 years ago. Kind of interesting. Anyway, so you could read that article and see, but I think partly the pop up here is because of that Wall Street Journal article, but it's certainly a good looking chart.
Lee, I did my fifth grade science project on solar energy many, many years ago. And I have to say, I purchased some of these solar stocks, like 10 years ago. I got burned. So
Yeah. Well,
I've
with
been
actually,
very optimistic about it, and then doesn't pan out. But I should get back
yeah,
in the game here.
yeah, maybe because well, they said that uh, some of the early solar panels were prohibitively expensive, and now
Mm.
the cost of those have come way, way down, and a few other things. So, again, though, if you're a technician, you don't need to know why. You just have to see that it is kind of zen-like.
Hmm.
Okay, let's see what else is moving today. Give you some trading ideas. Not that we give out recommendations. So we've been watching KWeb.
Hmm.
We talked about on Friday, it made its first measured move target from the flag breakout. Continues to go higher. These are Chinese internet stocks. Um, very interesting to me. Watch this consolidation in here as I throw up on the last two times. Sideways consolidation to the 10, then boom. Sideways consolidation to the 10-day, and boom. So that seems to be the pattern here. Um, so, when you have these big gaps up, well, you're going to have gaps up on this one, though, because they're based on, Chinese stock prices to a certain extent. So that, they gap up if they're doing better over there. But we've given you this one for quite a while. Yeah, we mentioned coal the other day, too. Keep an eye on that one. Threatening to break out, did break out. Potential target of 80 on this one. Set a stop under the breakout level. See what else is moving. Yeah, we talked about the copper miners, talked about coal. Cars is up because of Tesla. See, I think Tesla was,
Yeah,
yeah,
Tesla popped.
yeah. It's
Yes.
11% of this is Tesla. Interesting. We mentioned this on Trader Talk, just kind of, as you know, David Einhorn, big hedge fund
Oh,
manager.
yes, I saw that story.
Yeah. So Elon Musk sent Mr. Einhorn a package of shorts. to rub it in that he's been short Tesla on the way up.
Yeah, he has a big short position.
Yeah, which he
And
must be really hurting
yes,
right now.
because now their Tesla is as of last Wednesday, is the largest market cap. It's
Beat
beating
Toyota.
Japan's
That's right.
Toyota.
That's right. That's right. We talked about the miners in general. Let's take a look at the banks. First, let's take a look at the 10-year yield.
And if you're trading those financials, a lot of traders are paying attention to that 10-year.
Yeah. And they're usually one of the first groups, at least the banks are, the big banks in earnings season, right, Nina? So they should be coming out.
Yeah, JP Morgan kind of kicks it off along with others next week.
Yeah. So 10-year is up quite a bit. I'm thinking again, maybe because of the Chinese news, maybe selling a few bonds to rotate into stocks a little bit after the rebalancing last quarter. Let us take a look at the banks. Let's take a look at, they've been hurting. They haven't been doing that well. Let's just see. Yeah, they still have to prove it. Because right now, this head and shoulders is still in effect. All we've done is rally and try to test the neckline to go back above it. We have not been able to do that. So I would want to see us get back above 32 here.
I mean, the Federal Reserve said that they're probably going to be keeping rates low for quite some time. Last week, the FOMC meeting, their minutes came out from their last meeting, June 9th and 10th, and they don't see also a recovery in consumer spending to happen quickly this year. They think it'll be, more towards next year, but they're going to remain accommodative. And they did talk about, I've mentioned this before in different programs, they did talk about the potential use of yield curve control, where they have different, they call it YCT, yield caps or yield targets. And, not everyone was on board. They're not quite sure how that would work. But there are some central banks that are using YCT yield caps.
Yeah, we want to look at the smaller banks. Yes, same thing.
Yeah, I would think they're even more reliant, the smaller banks, right, on the consumer.
Yeah.
So if they start spending this summer, maybe that would be good for some of these small banks too.
Let's check the biotechs. Speaking of things that have been moving, these are the small ones. All they did was pull back to the 10-day moving average after their breakout. So
There is a convention, online investment forum going on this week, and it's going to be focusing on the novel coronavirus. It starts at the 7th, July 7th, so that's tomorrow. And they're going to be talking about the pandemic, and there's a bunch of companies that are going to be presenting.
yeah, what has been hurting is utilities. They are range bound. I think there's a little trepidation at the moment on these that if they don't increase either the unemployment, when that ends in July, if they don't do more kind of direct, will be paying their utility bills or not. Also, generally speaking, when interest rates go up, like the 10 years putting up a little bit, it tends to negative on the utilities. You'd have to say this is range bound. Okay, take a look at, we looked at the biotechs, take a look at healthcare in general. So the XLV is range bound, but put that one on a watch list for a breakout. Let's go and take a look at the XLF in general. We looked at the banks. Yeah, the XLF is kind of looking the same thing. Again, you can see here, you'd feel better on this one if you could get back above 2350, 2360, but there's better places if you're a momentum trader. So can we comment on European stocks and indices? I will give you one. I was on with Michelle Gibley, and this is something that she's watching in the European space. This is the financial, this is kind of the value play on European equities. So this one's beginning to move a little bit. And then the other one she was watching for the Eurozone is Germany. So certainly improving charts on those. All right, let's go back and take a look at the stocks. Kind of interesting that it's breaking out, even though Intel was, get this, downgraded to a sell in Goldman Sachs.
Yeah, they are outperforming, but Nvidia is the biggest, is one of the bigger players in the stocks. I don't know how much it's up today. But.
Let's take a look. Yeah, so it's breaking out. Yeah. Yeah, so, but let's take a look at Intel since it's downgraded. Holding its own, but certainly not moving like its peers. Also, if you're interested more in the European markets, you can go to schwab.com/on international for our take on the international markets. We have time for one more to see another industry that's moving, if you like momentum. Yeah, let's take a look at the steel stocks. Again, up, but I mean, improving, but it's not gangbusters. And with that, Nina, our time is up.
All right, great.
Goes so
Thank you,
fast.
Lee.
Yeah, so what is coming up next? They're working me to death today. I shall be back in just 15